The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. This Friday, the 7th of March. We're looking at the Dow up 86 at 42,664. I had mentioned to subscribers this morning, I can see some kind of a bounce, but unless the market is over 200, about 180 points higher after 2 p.m. this afternoon, or minus 200 at that particular time, this is going to be an important moment on the weekly charts, and I'll explain why in a moment because it's Technical Friday. I just want to run through these things, and I want to go through. I had said, and I promised both subscribers and Tiger and listeners that I would keep going back to my this larger cycle that I see, and what it would take for me to say this is the end of the market. And we'll talk about that, especially with round-the-clock trading coming in. I've spoken about this decades ago. I said at some point we will have 24-hour trading. It's just inevitable. Anyway, we'll get to that in a moment. We got a leg C to the downside right on the 200-period moving average in the S&P, and that price is 57.1164. Let me just change that, 57.11.64, right there. And we've broken a serious trend line. Let me just click this on, and I'll show you something very interesting here. New parallel. Let's just do that, and there's the next one. So we're right on this particular line. This is now, you're talking about deviations. Think of it kind of like a deviation right now. This uptrend line, this channel, I extended it to the downside. We've tucked underneath it this week. Right now, we're sitting right on the support level. This looks to me, based on the MACD, the stochastic, and the on-balance volume, I'm just waiting for the 9-period moving average to flip negative to say, okay, we finally got a sell signal in the weekly chart. I think that's going to happen. Does it happen today? I'm not sure, but I think it is going to happen. Now we've got the S&P with a doji candle at its all-time high of 61.47.43, right there from last month, and we're having a candle that's red so far. The month is young. We've only just begun. So I'm watching this candle very, very closely because we went back into the inside track repellent, propellant zone right there, and that goes back all the way to 6.66, the low of March the 9th. That was the 6th was the diamond's low on the Friday and Monday of 2009 March. Oh, wait a minute, what are we talking about? We're talking about 2009. I almost forgot. We bought the exact low, the diamonds, at the exact low in 2009, and Friday the S&P made its low. And by that time, a lot of people had actually given up on there being a low because we took out a lot of important things, and the Dow had a little bit of a turnaround on that Friday, and then it just never looked back. That was March the 7th of 2009. Here we are, 2005, March the 7th. Friday, isn't that? I didn't even put that together until this very second. All right, so let's just say that this is, even if there's a big pullback here, I can only go one step at a time, and all I can say is that we're on the 9-period exponential moving average, which is way above the 14-period moving average in the monthly chart. MACD has started to turn down, and the stochastic is still high at 84%. It is pulling back. And the monthly chart on balance volume is pulling back, but all of this is still extremely positive. That's the monthly chart. The month is young. Let's go to the QQQ. Nice little bit of a bounce in the Qs right now, off the low that was made yesterday in the 480. Let me just give you the exact figure. 486.20. And I say that we oversold. There should be some kind of a bounce, but depending on the payroll, the report that came out at 8:30 this morning. We just have to see what the reaction was. The reaction was immediately a pullback and then a big spike up. Let me show you where it is. There, right there. That's 8:30. And what happened is we pulled back pretty sharply in the E-mini, went back and look at this 200-period moving average in the 5-minute chart, how it's a magnet line. It goes above, it has to come back. Goes below, it has to come back. Right now, it's sitting right on it. Look at the 200-period moving average in the 10-minute chart, repellent zone. So we're watching this very closely, and let's get back to our story because it's very important. I had a question about the IWM, the Russell. We're out of the Russell 2000. We took profits, much smaller profit in the end than we wanted, but we did take profits all the way to the top, and then we got out. On the way down, we had a core position, small core position left. I wanted to be holding it. We got in the 203s, and it went down to 203.19. The question is, on the next rebound, is that the time to get the TZA, the 3 times short? I want to go one step at a time. My thinking is immediately say, yes, absolutely. But let me do this. This is what Larry loves to do, so I'm going to do it right now. Look at this pattern right here. This is the dreaded H pattern that I always talk about. That's my own invention from way, way back. It looks like an H pattern, right? What happens if the price fails the left side low? What you can very often get is a 1-to-1 to the downside. Well, 1-to-1 to the downside takes it just a little bit low. It takes it down to 202. I look at I don't know how he does it because I've followed him for so long. He does a fantastic. He uses his technique and he gets these things and he gets it almost. I've watched him in his webinars. He gets it sometimes to the penny. It's a beautiful. I just haven't been able to get that. I don't have the same tools. I have to make up my tools, but the fact is that he gets it beautifully. Let me just extend this down a little bit because that's what it is. Because what I am looking at here is that the IWM has the opportunity, if you can call it an opportunity, in March to go down and test the 200-period moving average weekly chart because this one goes to 200, but the weekly chart 200-period moving average of 197, which hasn't been hit. Look at this. It hasn't been hit since it broke out in October to the upside. Remember, we got the exact low. Which one was it? 203. We got the exact low in August, I believe it was. Yeah, that one there. So this is going to be very interesting because you've got your arch formation, you've got your potential head and shoulders. Everything suggests that the big thing about the IWM is to come back to 197. Here's number one. Here's number two. In the weekly chart, if there is a rebound, this ugly candle, this weekly candle with a high this week of 215, I think it was 215.96. If we can arch over at any point and really start to move to the upside, and the MACD still is very weak, and the stochastic, which is at 19%, only gets to like 22 or 23%, that would be the opportunity. But I have to go one step at a time because at this particular point, you'd have to be prepared to see a big pop at any point. Today was an opportunity. You didn't take it. I don't know when it'll come, but yes, this is one of the weaker charts. I want to go quickly to the SMHs as the break comes up. And the SMHs right now are up 2.25. Look, here's that 1-to-1. They're 1, A to B equals C to D. It's got nothing to do with Chapman wave, peak A, peak, etc. It has to do with the 1-to-1 lightning bolt pattern. Very weak action in the semiconductors. I'll be right back. Dow's now down 13, S&P's up 3. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, a little upset here because I had 3 to 4 stocks that I wanted to. I said we built up a big cash position, but I still see stocks that are actually acting well. And each one of those has moved up nicely. I thought just got to give it another day because we don't know what's going to happen with the payroll report and where the market will be. I should have just gone ahead, but I like the fact that they've moved. It means we can still get in because it tells me that these are, and this is what I wanted to, I'll talk about in my overview. I said I'll go through these stocks in the overview video this afternoon because it's important to be able to identify what's moving. But my one big question was, with one out of the 2 that I was looking at in a certain sector, was why would these be going up right now? If they are going up, it talks about some kind of inflation. But I need to talk about that in a moment. I'll get to it. I'll start off with the dollar. So the dollar right now is down again, down 35 ticks at 103.17. Remember, I said that there's a target that I have of the 103 to 102s. 102.65 is the 200-period exponential moving average. I don't know if it's going to get there right in this move, but it's already got to 103.71. We are long from 2018. This is the first time that I'm looking at it and I'm saying, okay, I remember back in 2000, was it 16? Yeah. The first Trump administration, he used to talk about the strong dollar. Well, in those days, let me just pull this back. 2016, right there. It was rallying and it was holding quite well, but then it pulled back from 103 down to 88. And that was in 2003. So 2018, we went along at 90. We've written it up. We've taken little bits off, just kept it as a core position, more as an icon of American strength in terms of the dollar being the strongest currency. It went to 102, then it pulled back to 89, then went to 114, and it pulled back again to the just on 100, and now it's rallied quite nicely, and it's arching over. And this is the first time I'm saying, well, is this the time to actually just get out of the dollar altogether? Because it makes sense, and I've been talking about this for a little while, that if the dollar comes down, making our goods more affordable, then the tariffs, which are not going to be probably not the 25 cents, 25%, they're going to be much less. Maybe that ameliorates some of it, right? So this is I think that the Trump administration is just doing way too much. For decades, I've been saying most presidents can do one or two things pretty well, but more than that, it's really tough. And usually it's one. But in this particular instance, what I'm looking at here is and they've said, this is the cutting block. They are trying to make huge change, and each person's got their own agenda within the administration. So when I was listening to Besant, what was his name today? Secretary Commerce, can't remember his name. But anyway, he was talking about specifics that to me said, there's a little bit more of a common sense approach there, in the sense that he's a person who's been in the game for a long time, understands all the displacement that occur, and all the in place and all the stuff that can be corrected, but how it has to heal again. It's like a wound. It just takes time that you have to heal. So I'm looking at this and I'm saying, I'm now setting aside that whole idea that was promulgated everywhere, and it's continuing all the time in the media. And even economists that I know well say, inflation is going to be a trade deficit. It's a complex thing. So I'm just setting it aside and I'm saying, you know what? As long as the dollar's going down, there's a chance that you can ameliorate some of the action from the trade deficit, as well as the tariffs. All of this it's kind of complex, but I can see how it could work. That's number one. Number two is, in the aspects of this huge coda that takes you to almost the end, like 1929, to get to that particular point, you needed 24-hour trading. And I've spoken about this not for years, but for decades. Decades, I've been saying, at some point it'll happen. You'll have little mom and pops and grannies and grandpas sitting there going from very safe investments, as they did in 2000, and they jump into all these crazy names, especially the ones that don't even survive in the end. And I think that's going to happen, number one. Number two is, within the context of where we are and what the market is representing, I think that the tariffs is really setting in place the idea of some kind of equity, because there are countries that have raised some products with very high tariffs, and nobody really said anything. So maybe this is something that needs to be dealt with. I don't know if it's going to be dealt with the correct way, but it's being broached. But I'm just saying there are so many aspects. And that says to me that if we're looking at the market in the shorter term, short maybe even to intermediate term, let's go back to the Dow, you've got to consider that we've had such a magnificent rally from 28,660 back in October 2022. Remember, we went long. We still have long positions from then, as well as long positions from 2020. That you actually want to have a breather in the market. You need it. It's important to get that. It's like a marathon. You just, even in the marathon, you have moments where you cruise because you don't want to push, but you don't want to let go. You're just you're mentally cruising along. You need that. And that's kind of what we're looking at here. So this is very important. Pullback, time-wise, maybe not that much in price. We'll see about that. The month is young. Now, the other thing I want you to talk about is to go look, the FXI, that's Japan. This is the large iShares China large cap ETF, doing well. So this is going to be absolutely fascinating, because we are pulling back, but China's going to new recovery highs. If it goes even just a little bit higher to 37.51 in the index, it goes to a multi-year high. The last time it was there was back in 2022, somewhere around February. Look at that red candle, right? So isn't that interesting? Okay, that's number one. Another thing that I'm looking at here is, so that includes, just because I get asked about this all the time, XPEV. Look at that, new recovery high. And in fact, it is that high that was made back in July of 2023. This is Speng. I still don't know how to pronounce it. Speng Inc. designs, develops, and manufactures smart EVs at a high back in July of 2023 of 2362, and the high today's 2370 is started a leg C in the monthly chart. It is at a multi-year high, not an all-time high. That was up in the 70s back when it came as an IPO. It went all the way to the 70s. So that's something that's happened. So I want you to show you not everything is bad all around. There are places that are doing okay. Now, within that context, we're about to go to a break, and I needed just to look at the TLT. The TLT, as we go to the break, is up 37 cents, but it's pulled back from the rally, but it is still up 39 cents at 90.79. That's a good sign. I'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Another aspect is that any inflationary thing any tariffs will allow stores to say, and companies say, oh yeah, it was tariffs, that's why we raised prices. So that's going to be very interesting. All right, so I've had a lot of questions come in. Could I look at, so I'm going to skip everything else that I wanted to do other than to say cyber, CYBR, cybersecurity, that's CyberArk Inc., cybersecurity, had a 421 round number high. Why is that in green? It should be in red. On the 18th of Feb, and it had a 421 exact round number high open. So that's really interesting. Where's it trading right now? At 334. Okay. So questions came in here. Here we go. So I'll go there in order. So the first question would be, if I can just go back to the list, of course I got to find, Meta. Okay. So Meta, did I do everything? I just wanted to quickly, crude oil. Crude oil is up today very strongly. Yep, it had a doji candle low yesterday. It's trying to run at 88.13. 70.38 is the 200 period exponential moving average that was support. Now it's very strong resistance. All right, let's go on. Dow's down 113. S&P is down 23. That's the reason, one of the reasons why I didn't add to those positions, even though I looked at them and they were in areas that possibly had nothing to do with the tariffs or, I don't know, tariffs or even the market. All right, let's keep going. So the first one is Meta. So Meta trading right now, where is it? It is Meta. Meta is down 12 at 615.71, made a peak F right there at 740.7. It was just over 70.40 because I was looking for round numbers, but it didn't do that. It went to 740.91. Then the very next candle was a big red candle, and it had a 736 round number open. So to me, these are really, just keep in touch with these round numbers. Round number open. That was the day after the high. So let's go on and say that this is coming down. And it's a G/C. At the end of the day, I'm probably going to make this a G. It's not a G/C anymore, having taken out that high that was made at peak F right there on the week of the 13th of December. And that's really the issue, is that the mega stocks that were holding the market up are really starting to pull back down. Even Microsoft, which had a round number, low at 381 the other day, had a fabulous bounce, but that's going to fail, I'm sure. So we're looking at this as the large caps of mostly high tech, the Mag 7, whatever they were called, the next level of support would be this doji candle right here for Meta, which is at, if I can just get to it, there it is. Okay, so the low is 609.01, and we're trading at 615. If that's taken out, watch this low that was made on the 14th of January. That was at 588. So those are the levels I'd be looking at. The downside, the stochastic's flat at 14%. You remember what I always say? If it's flat on the upside in the 80 to 90% or higher area, and flat, that's fantastic if you're bullish. If you're bearish, you want to see it flat under 20% in the 14% area, but then getting to the single digits. I think it's going to be going there. Meta is in a sell signal in the weekly chart. I have to wait for the close today, but at the close, I'm pretty sure it's going to go with a sell signal, but it's in a sell mode in the daily. But the doji candle of the monthly chart at leg D, it says almost certainly that even though this is just the beginning of the month, I don't know what would take it up into the 730, 740 area. I think that's going to be a peak D, and that's going to be something to monitor. Okay, so I hope that helped you. And the next question you had as well, you added one, was JKHY. JKHY. Just a quick notation of this earlier. I don't even know what it is. It is Henry Jack and Associates. Henry and Associates. So this is a really nice spike off the two. Look at that 200 period moving average hour. It's a springboard, right? And it's gone to a higher high. So this has to be considered as an A. This A could fail, but it's an A in the monthly chart. In the weekly chart. The monthly chart has gone to peak A, B, and it's in leg C right now. A, B. I'm not even looking to see what it is right now. Is this a characteristic of a company that loves to go to D's? Well, look at this: peak A, peak B, peak C, and a D right in the 210 area. Boom, comes down, goes down to 100 and the 130s, starts another buy signal. That goes to a buy mode. Yeah, so I like this very much. And let me just see if you're actually mentioning what they do. They do. Let me get there. Okay, moving up. I think I've written everything down. Jack Henry and Associates. I'll just do that right now. So Jack Henry, I should know what they do. Jack Henry and Associates does. And what do? They are financial technology company that provides technology solutions and payment processing services primarily to community banks and credit unions, helping them innovate, compete, and serve their customers. They're doing something right now. I like it. Yes, it's trading at 108.33 in leg C in the daily chart. The technicals all confirmed. The stochastic is at 80. I'd prefer if it was at 85, but it's okay. On balance, I'm just a tad overboard. The weekly chart, the MACD has just this week turned up, and this week the 9-period moving average has just turned positive. I do like this. Now, buying at a recovery high is tough, but if you are in it, then I can tell you that key support is at 188 right now. Key support is not the candle. The low today is 183. You got to go a little lower than that. 182 to 180 on a weekly basis. I'd say that that's something that you have to monitor. So far, it's acting very well. And I would not be surprised if it goes to a leg D next week. It's acting very well. In this environment, look, it's going up, and the market's going down, down, down. So I do like it, yes. Okay, next thing we're going to look at here is they do software. Thank you. That's exactly what I just read. And it's, okay. Now, the other thing that we want to look at is going in order of people. Would be WU, and that's really, I typed it in the wrong place, I'm sure. WU, let's just put this right in here. WU, which is Western, there we go, WU, Trading Western Union. Why it's moving like this, I don't know, but it's a fabulous chart. It went right to the 200 moving average at 1134, doing well. Dow's down 214, S&P down 41. I'll be right back with Western Union.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. an amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We've got a Denner who's been talking about this for a little while. I looked at it and then I completely forgot. Western Union is a financial services company that allows people to send and receive money around the world. So you can see why I just mentioned a financial company a moment ago that Henry, whatever it was called, symbol was JKHY, and now we've got another one going right through the 200-period moving average. And in fact, now a question would come, why did I not call this in the weekly chart leg A? Why? Because you can only start legs to the upside after a trough is made. This is the same bar. So you can't go A there. That's wrong. In my work, it took me a long time to figure that out, that you have to make a trough before you start. This is the A right here. Oops. Yeah, this is the A right here. It would have been a B if this leg up was after a trough. So it's not. So this starts and you move up, A, and it has gone above the left side high. So that's really important. So yeah, this is acting really well. Where do I think it's going to go? I think it's going to tackle this ugly candle from the October of 2024 with a high of 1190 and a low of 1098. If it can close, not break above it, it has to close above it. And this is one of those cases where, because we made a beautiful look, left side, right side, Chapman, look, here's your plumb line. It was 1 bar early in terms of going from the trough of 10.71, and that was in March of 2023. So I would say that would be approximately 2 years ago exactly. So there's no approximation there. And then it runs up to a peak D back in 2024, and that becomes your plumb line right there. Look, yes, your technical Friday, so we're going to be technical right there. There's your plumb line. And then you take your trough, you take your peak on the left side, you draw a line, and you see, does it come in to the measured move to the right side? I'm going to expand this so you don't have to look at it so tinily. That is an expression, tinily. So let's do that. Yeah. And now I'm going to open it up, and you'll see a beautiful cup arch formation. Dreaded H comes down from there, arches over, and we'll have to raise this for the moment, and I'll expand this so you can see exactly what we're doing. Is techniques I show in the den all the time when we're looking at the E-mini futures. And look at this. So it goes the number of bars on the left side from the March 2023 low at 1007 to the high that was made March again of 2024 at 14.19, comes down, and in February it makes a low of 10.04. That negates anything, because at 07 was the low. Once you go 1 penny below it, you have to start a brand new buy signal. You haven't. You've only started to move to the upside in the monthly chart. The technicals are starting to move up. Look at the MACD, how beautifully it held. Look at this, the stock that was up in the 26s goes down to 10, rallies to, what did I say it was, to the 14 area, comes back down to 10 again, and now it's rallying. So this is doing very nicely. Now, the rule of thumb is that once it starts to rally, you look at each left side high. If at any point in 2025 it actually closes, now usually it's not the monthly charts we're looking at for this particular pattern, but if it closes 2 out of 3 bars, that's months, above the arch high of 14.19, this will then go to the next high on the left side. And that's up in the 1479, 1484 area, and you just keep looking at the peaks. What's the key support? The key support is this whole area in the 10.80, 10.50. All right? So I hope that helped you. That was WU Good Eye. Fletch, very nice. Next one was, could I look at Uber? Uber. So this is one that I was very interested in getting. Wanted it, didn't get it, and then it had that good earnings and it spiked up. Well, I was looking at the 200-period moving average holding very well. We've been waiting, didn't get in, and then it had that great news and went from the 67 area all the way to peak D. Fourth highest peak is where other things can happen. That's your target in a buy signal to buy mode. Rallied to 82.10. I may as well put that in. 82.10, and then it pulled back very sharply. But it didn't pull back sharply enough to take out the low that was made to start the move to the upside. Remember, this was an instant restart. It just looked a little complicated. I don't want to make it, but I will do it now. Within 3 bars after a peak D, if you go to a higher high, you use an alternate count. So that becomes E/A, F/B, I should have put, and then it went to the D, right? G. Why did I do that wrong? I'm sorry, that was a mistake. Oops, let me get rid of that. And let me get rid of that. It should have been F, right there, F/C. Don't have to put it in, but I always put F/B, G/C. There it is. And now the C could be disappearing, and I have to put a down arrow because of the number of times that it's been underneath the 14-period moving average. This is early in the day, but we've got an S, meaning that the 9-period moving average for the first time flipped negative. So I can change this right here. I have to wait for the end of the day. That this G right here could go to a down arrow. And that says it's in a sell signal, probably going to be bumped up to a sell mode. So yeah, Uber. So the question is, where would we get back? Where would we start to think of getting in? I'm waiting. I'm waiting because it's held beautifully from that spike up, and it's made the sideways consolidation. But if you look at the technicals, now the 9-period moving average, which was really positive, is starting to deteriorate and flip to pink. And I have to consider that it could, there it just went off. That's what I'm saying. I have to wait for the end of the day. I have to see how next week, if it slides underneath, right there, underneath 71.60, which was the low of the 4th of March. If it does that, then the 200-period moving average of 69 will likely be hit. That's kind of what I'm thinking right now, but it's still on my list because I love innovation in terms of being the cutting edge, the leapfrog from one particular aspect like taxis to something like an Uber. And when I was in Sydney, I took a lot of Ubers. I usually drive there, but I didn't drive this time. It just was so convenient just to pop into an Uber because my brother took us around and we were just driving everywhere. So when I needed to, I went Ubering, and it was pretty easy. Except, there's something I should mention. I could not rate the drivers and give a tip unless I gave them 5 stars out of 1 out of 5. And I gave a guy a 4, and I thought he was pretty good, but I thought, 4 is pretty good. I mean, I didn't think I wanted to give a 5. And it wouldn't go through. Then my wife said to me, wait, see what happens if it goes to 5. So I go 5, goes through. And everybody after that, I had to give a 5. Even if I didn't really want to. Very interesting. Is this how they rate themselves? By forcing you to give a, well, maybe it was just the technological inadequacy that did it, but that's what happened. All right, I'll be back. So let's wait on Uber. It's not doing anything right now. I'll be right back. Basil Chapman.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Yeah, thank you, EKS and the Tiger YouTube. Folks, just check out YouTube. Check out the Tiger Den. Just fabulous comments and ideas. So it says Western Union Company, 6 times PE and 8.5 dividend. Ooh, that is very nice. And I always say, don't go for dividend unless you're getting a chance of capital gains. I don't want to see a wonderful dividend and then you lose 15% and your huge capital. It's a big loss. So Wolf was a question. Wolfspeed Inc. develops, manufactures wide band gap semiconductors, greener technology, makes an Eiffel Tower straight up peak A, and then it fails and takes it out. Now it's trying to bounce. I can't tell you anything about this. It's a story stock. Every time I see it bounce, I think, oh, Wolf, maybe that's great. WOLF is the symbol 553 right now, 49 cents. Really good on the day, almost 10%. But wow, it gives it back so quickly. So all I can say, the move now is if it hadn't taken out the low of the left side, I'd say, wow, I'd grab it right now because it's got to move. They could go to the 568 area and then the 592. But I can't say that right now. So I'm sorry. I don't think I can help you other than to say, if you like it and you'll be waiting for this bounce, just start a small position here. And I would have a stop of, it's at 554. I'd have a stop of 523. I wouldn't be messing around at all. Okay, I hope that helps you. Now, I need to just do something real quickly. Putin said to be ready. Putin said to be ready to agree Ukraine truce with conditions. Oh boy, this is going to be very interesting. You know, I'm really pleased to see that Trump is tackling all these different things. I'm just saying there's a lot going on, and I think the market is showing that is, it's a little worrisome because you don't know where things are going. How can companies using huge capital really make plans right now when they don't really know what's going to happen next? Well, they don't always. Remember, markets love, well, everyone says markets hate uncertainty. I say nonsense. Markets hate uncertainty about uncertainty. Have a wonderful weekend. Stay tuned for Steve Rhodes. It'll be a great show as always. Check out my opening call. And today I'll be doing my overview for subscribers.